Ravi bhai, you talk about multi-baggers over the next 5 years where you could make possibly 4x, 5x returns simply based on earnings growth. I'm not sure whether you'd like to name stocks, but definitely sectors where Valuequest has its radar. And where do you think such multi-baggers reside at the moment?
So, thanks for that question. And you are right. I will not speak about any one particular company, but there are some themes which excite us a lot from the next 5, 10 years point of view. And some of the themes, I'll just name them. Financials is one thing that we are very bullish on. Second is the manufacturing in India. And the third is the energy transition. I will just detail out each opportunity a little bit more that will give you some perspective. Let's start with financials. Financials can be divided into lending and non-lending. See, in the lending space, we are at a stage, in fact, last 2 years, finally the growth has come back. Okay, the banks are very well capitalized. There is credit growth returning finally to the economy. And there is no NPA cycle, asset quality being deteriorating anywhere. There could be a possibility that 3, 4 years down the line that these asset quality issues crop up. But right now we are in a stage where the optimism, the business optimism, the consumer confidence is high, and there will be re-leveraging of the economy that will be panning out. So financials will do well. There will be some hiccups again related to the NIMs or margins because the interest rates go up and down. But overall, the credit growth cycle is intact and it will remain so. That is one space. Second space is the non-lending financial. Within that also, there are insurance company, market infra companies, wealth managers, all those kind of companies. They are essentially a play on the financialization. What is happening is India is going from being a physical assets oriented economy to a financial assets oriented economy. And within that financial assets, of course, the money is flowing into various asset classes, but it is flowing into equity markets also. And that I think is something that we can actually capitalize on over a 3, 5 year horizon. So whether it is exchanges, wealth managers, or penetration of insurance products, all those things is a great opportunity. And these companies are actually available at a decent multiple. So financials is one space where we believe there is a possibility of growth plus re-rating, because last 5 years have not been great. There has been a lot of competitive intensity. There has been a lot of regulatory pressure on the yields, which has led to the valuation correcting. So now the positive cycle has started, and I believe the even the regulatory push will ease a little bit from this point on, and we should have a good clean run for the next 3, 5 years. So that is one theme. Second theme is the overall manufacturing or the capital goods cycle in India. So we had almost peaked in 2010, and there was a 12-year period where the capex cycle would just not pick up. Central government had been doing the heavy lifting since last 4, 5 years and put spending in the money in the economy. But now, since last 1 year, the private capex has also started. And why has it started? Because first of all, the profit cycle started. What happens is usually first the companies need to start making money. Once they start making money, then they get the confidence to invest for their future. And this process of investing for the future usually lasts a 3, 4 year period. It's not like overnight suddenly there will be an oversupply situation or something. And that confidence has taken a long time coming. See, in the last 5, 7 years, we have had all kinds of crises, from demonetization, GST implementation, ILNFS crisis, COVID. Everything led to crunching of the informal economy. Everything led to the money rolling, getting lesser and lesser in the economy. So now finally the money has started rolling. The confidence is back. Corporates have started borrowing and investing for the future. So that is leading to a cross-sector boom in the capital goods. And then within capital goods also there is manufacturing, which is another thing where the world is moving away from China and is looking for an alternative vendor or an alternative source of supply. And India is actually in the right place at the right time, and they will be able to provide that opportunity. So we will be able to take away some market share from China over the next 5, 10 years. So Indian manufacturing is really booming at this juncture. The last theme that I want to just spend a couple of minutes on is energy transition. See, the world is moving away from fossil fuels and it is moving towards green renewable energy. So there are various things, whether it is solar, wind, biofuels, hydrogen, electric vehicles. There will be many sub themes within energy transition that is the future trend that is panning out, and we need to take advantage of that. This is going to be the largest capex on globally, the largest capex ever by humankind. Okay, I think almost more than $1 trillion per year are going to be spent on moving away from fossil fuels. And it is not one country that is doing it, the entire world is doing it. So if you can find companies that are selling picks and shovels to this opportunity, then that is a great place to be from a next 3, 5, 7 years point of view. So these are some of the themes that really excite us over the next 5, 7 years period.
If you like the video, do like, comment, share and subscribe.